Bitcoin, BTC, is it getting away a little bit too hot, a little too far away from the moving average? Are we going to pull back and actually give people a chance to get into the Bitcoin trade? Because it's just been like burning super hot. It's really hard to find a long entry on Bitcoin, but I think we may be getting one soon. So I'm going to take a look at what I think the actual trend line is on Bitcoin, because this one I think is too hot. Like, this trend line points at like $1 million Bitcoin this year, and I don't think that's right. I think that it's bullish, but not quite that bullish. So I'm gonna look at the moving averages and a better target, and then at the end I'm gonna show Bitcoin option trading. There's a cool place that does mini Bitcoin options, which is what I'm looking at doing now. This is Brian Lewis with MMT Investing. Please like, share, comment, subscribe, turn on notifications, and let's talk about some Bitcoin. Okay, Bitcoin. So, Bitcoin has been looking questionable, and I wanted to do a longer term look at it. I mean, right now, what I see right now is a rising wedge dead into the moving average, and right above the moving average, we have sort of a down channel. And it looks like we're just popping right at it right now. 54-ish. Yeah, like 54-ish is kind of the range where there's a moving average, a neckline, and a down channel. So I don't particularly like Bitcoin at this spot, uh, other than a extremely dangerous short potential idea, maybe. Um, but outside of just the kind of back tested off the support that we were on, but I wanted to go out farther because if we go to the dailies, now we'll have the 120-day moving average, which is my favorite sort of check-in spot on longer term trades. My internet doesn't want to load this chart. That's okay. Okay, that's better. All right, so if we go, Bitcoin kind of cycles in 4-year cycles because of the halvenings, and that's when Bitcoin becomes more scarce. So it'll bubble as a result of the halvenings. And it tends to actually every 4th year, like bull right to September, which is pretty wild. But like if we look at the last one, you can see this 120-day moving average is a check-in spot 1, 2, 3, 4, 5 times, right? Before you get to the big blow off top. And then we consolidate over, start bulling on top again, right? So now we've taken off though. We've taken off ahead of the moving average, which is not super common, and this is a pretty mean support line that we've been bulling on, but we're bulling away from the moving average, which is a little dangerous. And so in general, this kind of crossover doesn't look too bad. You can see the last time we flagged here, Bitcoin got above the channel, right, and blew out. Fine. And this time we flagged back. We got above the channel and we did a sort of a false breakdown, back tested the channel. And you can see the moving average is coming up here a little bit under 40. And right now, we just back tested off our support line, and now we're sort of picking up a downtrend line. So, I mean, I think Bitcoin's going to do a notable pullback in the next week or two here in this area. As the moving average comes up, we got our resistance line coming down. You know, somewhere in this 40 to 45 range, I could see Bitcoin just kind of pulling back into the moving average, and then, whoop, lost control of my mouse, doing something crazy like that. Yeah, so I think there's a bit of risk in Bitcoin, and Bitcoin has also been somewhat pulling back with the S&P lately, but I just wanted to point out S&P just did some craziness. S&P has been kind of looking weak, and it just threw today into close a monster freaking green candle, almost to all-time highs. So that's an interesting look. That's not particularly bearish looking. So let me get in on the S&P and take a look at that, because the general S&P, look at this freaking green candle. The S&P just threw this monster green candle at close. And it was not any of the tech or innovation stocks that I've been talking about that were part of this green candle. They had very bad days and like just minor recoveries into close. But I did close absolutely all of my short positions when I saw this green candle taking off on the S&P, and I'm not short anything as of the close of options today. So, and that put me all cash. I'm all cash because I was basically all shorts until pretty much into close today, about half an hour into close. So this is where the S&P has been, messing with this bull channel. So this is our little bull channel for the last few months. We started trying to break down, and we're pulling back up into the bull channel here. But this last time we broke down, we were coiling under, we're rejecting off the bull channel. So we're underneath it. It's looking super, super bearish, but I mean, you can make a huge move up to all-time highs and still backtest the bull channel without getting back into it. So if we take a look at this green candle, first or second check, like a big grinding reversal off the channel, but you can easily get like a last kind of dead cat bounce, even if we're rejecting off the channel. So my bearish outlook is potentially going above 4,000 and backtesting this bull channel one more time, even in the case of a bearish reversal off the bull channel. Like that could happen up here above 4,000. And then we have the bottom of our longer term bull channel down here at about 35. So I'm not getting bullish yet, but I'm definitely not holding any options over the weekend when the S&P's throwing this huge freaking green candle. I'm out of the shorts. I want to see what happens. And so I guess for Bitcoin, like Bitcoin could do that rising wedge reversal about the same time that the S&P does a reversal off this. That could basically happen over the weekend, and I don't know where it would open. So yeah, pretty much in the bearish case now, it looks like we want to get up to this channel again for the S&P, and not all the sectors are raging up. I don't know which sectors are leading this actually, but just the general market, I would not be surprised to get a 1-2 check off the bottom of the channel and then make a bearish move if we're going to make a bearish move. And then in the bullish case, you just want to get back in this channel above it and you want to find some support. So basically, as far as positioning, going long to the channel is fine. I'm not doing that. But once we get up here around this channel, we'll start hitting resistance here. I don't think there's a whole lot of upside. Like, if we break into the channel, I don't think we're immediately like going to the top of the channel or something like that. Like, if we break in here, we're going to probably pull back and test it and play around. And I think there's very little bullish upside in the short term once we get to the channel. But if we start false breaking into it and back testing it, there can be some big bearish downside off the channel, like we got here. You start checking the channel, like we hit it 1, 2, 3, 4, 5, 6 times or something real fast over here, did a pullback, and now it looks like it wants to go back to the channel. But this one probably would not be a long grinding reversal. Like we did our coil unders, we did a quick reversal here. This was our big grinding thing. Like if we do a dead cat check of the channel, it's going to be a faster one. So that's kind of the look. I mean, for me, if we get up here, if we're up around this channel Monday, I'm probably going to be shorting it. And then if it doesn't get out of there in a hurry, the longer it stays near this channel or gets into it, I'm going to not short it anymore. That's just kind of the look on the S&P. But for Bitcoin, like Bitcoin chart is doing something similar at the same time. which is this rising wedge here. And that's doing a rising, yeah, so, I mean, we've got kind of a moving average coming as resistance here at 54.4444 or whatever. We've got a neckline at 55. We've got this down channel a little bit above 55 coming down. So this 54.55 space, there's a ton of resistance ahead of Bitcoin. And this is a really ugly, bearish rising wedge. It's basically the ugliest type of a bear flag that you can have. And it looks like it may have already happened. I don't know. Looks like we just kind of are pulling back a little bit off where that moving average is. But I wouldn't be surprised to get all the way up to 55.5 before this kind of breaks down. Even though the wedge looks like it doesn't make it that far. It looks like it only makes it this far. So anyway, that's the kind of idea I was thinking. Like, I think if Bitcoin's going to pull back, it would probably happen alongside the S&P pulling back. And I think that there is a reasonable risk of the S&P not making it to the bull channel or rejecting really hard off the bottom of the bull channel again. And Bitcoin in a very similar time frame, I think, could reject off of this kind of bearish rising wedge. And then again, if we go out to like the weeklies, or I think dailies is good enough to see the, yeah, to see this bull thing. Yeah, so yeah, anyway, we're bulling really hard on Bitcoin, but we're bulling like too fast and too early above long-term moving averages. So coming back and finding this moving average around 40, 50, something like that, would not surprise me one little bit. And then, as I was saying earlier, December, this is coming into December of the 4th year, right? So December's out here a ways. So I mean, if we bulled, let me show you some numbers, right? If we bulled on this line that we're on now out to December, that's like a million-ish a bit per Bitcoin. Like, I think that might be a little too strong. I am bullish on Bitcoin, but I don't think it's going to over a million by December. But I really do like December as a time date for a bullish target. But I think we're going to have to come back to the moving average, and we're going to have to find a more reasonable bull line. And I would expect something more in the 150 to some less than a million range as a bullish target. But anyway, that's just kind of my thought on Bitcoin. Is I think we might get a pullback right now, like the next 2 weeks, next week specifically, and then a killer spot for a long entry. And I wanted to mention, I'm not sponsored by anyone, so that's not an advertisement, but I was just playing around on LedgerX, and they have Bitcoin options. They have call options and put options, and they're Bitcoin mini options. So it's like it's a call option on 0.1 of a Bitcoin, which makes them reasonable priced. Like, the options are in several $1,000s. It's not like $100,000 per option, which makes them accessible to random people or just anyone who doesn't want, like a $300,000 option on Bitcoin. But I will be definitely looking for call options if we pull back pretty much anywhere in this range. If I see sort of a bullish pickup pattern anywhere in this range, I'll be grabbing Bitcoin call options in here. And so, yeah, I guess talk about strikes and durations and stuff of call options. So my general call option play, I don't trust this bull line that we're on now because I think it's too far away from the moving average. But as far as the general idea with call options, like if I'm playing kind of to December, which can't even get out that far on this chart apparently. Let's go to the weekly, where it looks super parabolic and ridiculous. That does look crazy. Our weekly moving average is way down here. So yeah, let's look at that. Like, Bitcoin will bull above the weekly pretty consistently, but it doesn't really bull above like the 120 day that hard usually. But anyway, just if you find a support line, like maybe I don't trust this support line, but maybe I think we are going to pick one up like down here or something like that. Let's say we come back to the moving average and we get a bull line like this, and I want to get out to December. So this bull line would say that's like 250, right? In December, 250, 300, right? I think that is absolutely a reasonable target. So I might strike around 200 or less. And LedgerX has the longest duration call they have on Bitcoin is No, it's December 2022. So they do have a call option that goes out to this time duration. You could strike at 1 or 200, I think, are the options. They might have a 150. Any of those sound pretty awesome to me. Long dated call out to December next year because I'm targeting December this year as my area where I want to close it out. And somewhere in the 1, 2, 300 range. I think they have all those as options. And they would all be pretty decent. You just kind of look at the call ladder and see what prices look good. I think if you probably strike at 300, it's not that good of a deal. Like, it's so far out of the money, it kind of falls off the ladder. Probably like 1 or 200 is probably the better prices on the ladder. But anyway, I think I'm going to go ahead and pull this bull market line down to where I think the moving average would pick up. And also because I think that price range is actually reasonable for where I could see it in December. And that, $200-300 range, I think that's completely reasonable and it lines up with the averages. So I think that's going to be my strike. I'm going to strike at like 250 whatever, or just like name this video like Bitcoin to 250 by December or something like that. That's what I'm thinking. But short term, I think we're pulling back to this trend line right now, like next week. So that's my outlook on Bitcoin. The S&P, regardless of this ridiculous freaking green candle we threw at close today, not bullish on the S&P this week. It has to do something that looks bullish to me, which it hasn't done in a little while. Look at this thing. Okay, so this candle, that's a wild candle. So, I mean, are we going to get a flag off of that thing? What is that going to do? I mean, we're up here shy of, like, that's a pretty good resistance spot where we got all the action off of the previous one. What is that going to do? I don't know. I really don't think we're going to make it all the way back up to backtest the bull channel right now. But this is a hell of a freaking candle. If we're not going up to the bull channel, like, this thing needs to parabolically reverse back right where it came from, like, right now. Otherwise, I think we're going to go up to that bull channel, which it could do that. Wild. That's a wild candle. I saw that thing taking off, and I sold absolutely all of my short positions as soon as it started doing that. And I don't think it was a dollar, like, fall or anything. No, the dollar's still super strong. This is really bizarre. Like, the dollar is real strong, and the S&P is throwing a mean green candle at the same time. That's weird. That's super weird. Like, I think one of them is probably wrong. Was the dollar wrong? No, the dollar's never wrong. Wild. What did the VIX do? Did that crush the VIX, that candle? It didn't. It only pulls back down here. I was wondering if that, like, crazy candle would fill that gap on the VIX. Because filling the gap on the VIX would be like, okay, now the VIX is free to do anything. But it didn't. It didn't do it. But if like by Monday we are up backtesting that bull channel again, the VIX could easily, that gap could be filled in the VIX. It's back here. Too far back. What's going on? My internet's so slow I can't even freaking look at the charts. Yeah, but we gapped out. We gapped out on the VIX here around the COVID crash. We have this big gap, and we're sort of starting to close down on it. But we need to throw like a candle down and close this gap, and then the VIX could do absolutely anything. It could do anything, including just falling down to like no big deal. Like, we could close the gap and get resistance and have a crash, or we could just like go to all-time highs. But the VIX has just been working and fighting to get down here and close this freaking gap, and it's just about done it now. Anything else special going on? I mean, Bitcoin, I guess it's good to look at like gold and silver in a Bitcoin video. It's like the other kind of currency stuff. Or the other, let's do the Doge and Ethereum. Because here's the Doge. People have been kind of freaking out about it. I just kind of picked up a bull line, flagged. This flag was crazy looking, but now it doesn't look so crazy. Looks like a super boring sideways flag, which is nice. These are suspect to pull down into support before they make it to the trend line, which I wouldn't be surprised if the Doge pulled down here. But it looks like it's just flagging to April, middle of April. Whether or not it pulls down into support, it looks like it'll flag into the middle of April before it really picks up support again. So that's kind of the Doge. It's a weird coin, and it can get bubbly around the top of a Bitcoin bubble, and that's what I think we're kind of coming into the end, until December of this Bitcoin bubble. Ethereum has looked weak over the last, I don't know, month or so. It's been wobbling. I mean, it was bulling really hard. Now it's wobbling and doing weird stuff. It's kind of picked up a down channel. Maybe we're heading into support here, like this beginning of April areas where stuff gets interesting. But Ethereum bulled super, super hard ahead of Bitcoin to the top of the last Bitcoin bubble, and that could easily happen again. You could see these altcoins, the bigger ones like Ethereum or Monero, bulling even harder than Bitcoin's bulling towards the end of the Bitcoin bubble. So that's kind of what I'm thinking on the coins. We have silver. Silver's been pretty boring. I mean, silver did a freaking flagpole last year. A really, really mean ripping flagpole. And now we're just consolidating sideways kind of around this 24.5 area. And it doesn't show any signs of picking up a new sort of support or bubble trend line yet. It's just flagging, but I don't know where it's flagging to. It just keeps flagging. So silver's sort of boring until it picks up, a trend line, but we could see silver picking up a trend line like the same time as everything else. If that's like in 2 weeks or 3 weeks, kind of middle or end of April maybe, when we do a big kind of reversal that I'm kind of looking for. And then gold has just been bearing hard for a while, man. And so this is a big like counter argument to the whole inflation theory. Like, we do have the interest rates rising like this year, but gold's bearing down. So that's not really an inflationary signal. For inflation, you want a weak dollar, you want bullish gold, and interest rates rising. And as of like a few months ago, we had 2 of those. Now we only have 1 of those. Now we even have a strong dollar. We have a strong dollar and weak gold, which is not inflationary signaling at all. And we do still have interest rates rising. So if we look at like treasuries, like this is like the TLT is like the treasury fund. I mean, the rising interest rates have been basically the opposite of this chart. Like this has just been bear and crashing since COVID. This is the treasuries. And so the interest rates going up is the same thing as the treasury bond trading prices coming down. And then I guess I'll look at the yield curves. Let's see, you gotta take log off, go to dailies. Dailies probably good enough. So you get this interest rate cycle every like 5 or 10 years. This chart's not gonna work. Weekly. Yeah, it's like 5 or 10 year kind of, that's sort of banking interest rate cycle where the interest rate spread will increase and then it'll go kind of flat. Where is it? Oh my god. Come on. Here we go. Alright, so, we came down. This was like 2018, and this little down move here is the COVID crash, which barely affected anything. But interest rates, or interest rate expectations as far as bond trading goes, has just been bulling really hard. And so this pattern I drew here is basically what I'm expecting. We're like halfway up, it'll get choppy, it'll top out in a year or two, and then we'll get the next down cycle, right? So as far as inflation goes, this spread doesn't tell you if it's inflation or deflation. Like, we had this interest rate cycle in the 40s to the 70s. We had this cycle, and interest rates were going up from like 6% up to like 20%. And then from the 70s down to now, they went from 20% down to 0. And so here we're, at the bottom, this is like 0 interest rates. Now, this is like the 10 to 20 year spread, right? And the short-term treasury bonds are right near 0, and the 30 years like pushing around 2% or something according to bond trading, but the Fed says no, everything's like near 0. But they're not going to be able to keep saying that when this thing trades up to 3 and 30 years are at 4% or something. Like, the Fed's not going to be able to say interest rates are at 0. But as soon as the Fed announces like a 3 or 4% interest rate, people are going to freak out. So that's a kind of a waiting game, I guess. But anyway, the point is, this spread cycle, like, banks do well when the spread's high, banks do poorly when the spread's low. That's one thing, but this doesn't tell you whether interest rates are increasing or decreasing overall. Like, the next time this thing comes down to the bottom here, in 5 or 10 years or whatever, if this lands at a positive interest rate, say like 2%, then that will be an inflationary signal. That'll be like an uphill W on interest rates. That would be an inflationary signal at that point, like 5 years from now or something. If this thing comes down to a low spread and we land at a negative interest rate, then that continues the deflationary thing that we've been doing forever. Oh, get out of here. Get out of here. So if we just look at like the 30-year, we're on the weeklies, right? You can tell on the 30-year here that, I mean, this is just like the long end of the interest rate. It's just been a bear. It's just been bear. It's been a deflationary thing since the 70s. How far back does this thing go? It only goes back to the 80s. Well, anyway, take my word for it. It was topping out in the 70s, and interest rates were like 20 freaking %. They were insane. And it cycles up and down, but this thing has been a deflationary decrease in interest rates the whole time since the 70s. We got a really low bottom here in the COVID crash, right? And so yes, we're on like an up cycle like this week, this month, but the next time it turns over, this is what I was saying on the yield spread, like, it'll cycle up and down, but when it cycles down, do we land positive and pick up an inflationary trend line? Or do we land, I mean, this is the 30-year, like, we have room to go down without even getting to 0. We can land above 0 and still make a lower low here. But as of yet, as far as the deflation-inflation argument, like, dollar's bulling right now, gold is doing bear moves. None of that sounds inflationary. And we've yet to make a higher bottom on this thing, like, in 50 years or whatever. So this still looks like deflation to me. I wouldn't be shocked at all to see us land lower next time. Whatever. That's like 5 years from now. That will be a discussion point. But that's the whole, everyone's freaking out about like the inflation scare idea, and I'm just not buying that at all. Not right now. What's another thing related? I guess miners, like if you're looking at silver, the silver miners are cool. So the AG silver miners have been in this consolidation range forever. We got this little bullish breakout, false breakout, boom, and then we got a real breakout. So this is a cool thing I'm watching. It's a relatively slow-moving chart, but I like it. This is AG. It's First Majestic. Like 1 hour is probably good enough. So I'm looking for now that we broke out, we're kind of flagging around this 15-ish, kind of 17 range. We've been flagging for a while, but same kind of time frame. Like April 1st looks really hot on a lot of charts, or like the farther you get into April, things probably will start bulling, no matter how far they come down by then. I think things will be bulling by the end of April for sure. But yeah, this AG chart is silver miners. So I was looking at silver flagging slowly across with like no structure to the chart at all, like no indication of what's going on. But this one has a ton of structure. We know exactly where the top of the channel is that we broke out of. We have a gap right here. We have a gap right here that hasn't been filled. We're staying above the gap support. Wouldn't be surprised to see silver pull down and close that gap, and at that point pick up a trend line. This is kind of the idea I have for this. Like if we pull down here and close the gap, I'll be buying this thing up. And that probably would happen at the same time as like actual silver might start bulling, and random other miners and things like that I'm looking at might start bulling into April. Not quite there yet. Still have a bearish outlook for the next week or two, possibly. Yeah, alright, so that's a bonus. Can't talk. Internet's slow. Just really struggling. But yeah, it's the same idea with a lot of the things. Like, I think that there is a big percentage, like, risk of a pullback over the next week or maybe 2 weeks. And then I think there's a huge opportunity for, like, a screaming, not just like a bull market, like a vertical, like, screaming move to the top of the freaking everything bubble. I think it could be really vertical, really aggressive move up. And I want to time that, and I want to jump on it. And this stupid green candle right here is really making it difficult to figure out what the freaking chart is trying to do. Because if it bulls from here, then there's no good entry, and it's kind of boring. Like, if it bulls from here, then all we do is just kind of blah, 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 blah in this channel, and then maybe we go to the top of the channel later or something. Like, this is just boring, bullish crap. Like, that's not even interesting for, like, options trading or anything like that. But, I mean, if we do a back test off of this and rip down to some support down here, like farther down, like that's a super interesting put option kind of place. What happened? Oh, I gotta turn my logs on. Yeah, all my trend lines are logarithmic, and can't look at the treasury yield cycle with that on, but yeah, if we rip down to support, like that's a killer like put option area on a vertical move down. And this is a very common thing to do near the top of a bubble. We've already had several stabs, and you know the big stabs like the COVID stab on the large scale time frame. Like that thing ripped a lot farther than this move I'm looking at here. But this is actually what I expect to happen, is we're going to freaking come down and test out this support area. And I think we're going to catch support, and then I think we're going to go up into this bull channel and probably on top of it. And around that area, that's the sort of the top of the bubble, the top of the bubble zone where things get scary, and it has never tried to break out of the top of the big bull channel. And I think, I mean, it can wobble and grind on this thing until the middle, late part of the year. It's gonna be an extremely scary place to be bullish, as it's like back testing the top of that channel. But until then, I think there's a lot of opportunity for huge vertical movements, really cool like entries for calls and puts, and then it gets scary, and then it's only like looking for puts if we turn over onto the backside of the everything bubble. It's just like putting the dead cat bounces on the backside of the bubble. So that's kind of the look. Oil, not so much related, I guess. But I've been just kind of watching it because if oil gets up to like 63, I'm going to want to short it. But I did an oil video just like a couple days ago, and I was looking at this. It was pushing underneath, support, and it looked weak. And I'm like, this thing looks weak and scary, and I'm looking for kind of a trade setup to short this thing. And it just freaking fell out, and I got no entry on this short. But if we can get back up here to this like neckline-ish area, maybe Monday, I might be shorting oil. And not like US oil, like the UCO or USO. These are the funds that I like to short on oil, particularly the UCO because it's triple leveraged and it has compounding and it has futures rollovers and all kinds of structural like things that are really, really bad when oil crashes, and it's the most like leveraged, like ridiculous thing to short that I think I've ever found. Okay, so I guess that's my look. My look is short-term bearish, like a week, 1 week, a week and a half bearish outlook, then probably like 3 months of bullish outlook, and then the rest of the year gets pretty scary, and then got to figure out the top of that bubble and a potential bear market after the top of the bubble. But that's a little too far out. So that's the idea. Not investment advice, just drawing like the lines that I see and how we might bounce around on them. So yeah, happy trading.